Good evening. Tonight we have Bjarne Bauer, managing partner from Sofia group here. And tonight you will serve as our property market expert. Thanks for coming.
Sure, thank you very much for having me.
Bjarne, introduce yourself in 3 sentences and what your company is doing, please.
Sure, my name is Bjarne. I'm in Shanghai since 2004, so pretty much 20 years. And we do industrial and commercial real estate, mostly helping international companies, American or European companies, buying or renting factory space, warehouse space, office space, and all kind of commercial and industrial real estate.
Perfect, thank you. And I warned you, I give you 3 keywords and you can tell me what you think about if you hear that. And this is not prepared. So the first one is China speed.
China speed? Well, the China speed is incredible and the whole world needs to adapt to it or learn from it or find a way to deal with it.
China innovation capabilities.
Very strong, different from what we think in the West, different from the idea of saying, okay, I need to be a controversial, I need to whatever, fight the world. But innovating on so many levels. I think very recently the last German solar panel whatever provider went bankrupt, and I learned that they had twice the amount of employees per panel or per megawatt than the Chinese factories typically do. So that shows you that innovation.
Shanghai.
Shanghai is basically my favorite city in the world right now. It's a beautiful city, a safe city, a friendly city. You have everything. You have cheap things, expensive things, friendly things, foreign things, Chinese things. You have all kinds of food, all kinds of entertainment. It's a good place.
I can see already you have a lot in your mind and I could not trick you. Let's talk a little bit about the property market. We are still in a situation where a lot of the challenges we are having currently in the economy in China is blamed on the property market. Maybe we start from scratch. How did the property market look like in China? Why is it of such relevance for the economy?
Well, obviously because in a developing country that China still to a certain extent is, and for many years was, property construction tends to have a very high percentage of the total GDP. And in China, until very recently, construction and real estate with its related sub-industries were accounted for about 25 to 30% of the yearly GDP. And roughly 25% is realistic, I would say, but roughly every third job was related to it. And that is fine 10 years ago, where everyone was lacking shopping malls, apartments, offices, factories, everything was lacking. So you needed to build more. And now pretty much whatever is needed is built. In the US, it's about 15%, and I think China is now getting kind of from 25% to 15%, and that is what we are seeing right now. It's overall a healthy thing, but the change, the process is a painful one.
But where does this pain come from?
Well, now suddenly a lot of people don't have rising property prices. A lot of that optimism is gone. A lot of the banks and the financing companies and the financing instruments in between, a lot of these high yield products, a lot of these, aren't financial products that you have on your phone. More or less all of them eventually end up in real estate development. That's a high risk, high return business. And that went very well for the past 30 years and everybody was happy. And now it's not going so well. And we see it especially with the Evergrande, the bankruptcy and so on. It is those bondholders that had these high yielding, high risk bonds, they get the biggest haircut or they get nothing. And that is what's going through the country right now, I feel.
What does it mean, high yield?
Well, you get a high return and you have a high risk. So
I mean a number.
Very high. Real estate development loans used to be in the 12 to 15% interest rates, just because, you don't have that. It's a high risky thing. But then you have bonds, foreign bondholders that were like between 12 and 20%, in a way, junk bonds. And people just enjoyed it as long as it worked, and now it doesn't work anymore. So my sympathy with those high-risk investors is actually limited. But of course, the individual person who bought an apartment, used their life savings, and now sees the value of the apartment drop, that's of course a bit of a different story.
I read around 65 to 70% of private households' wealth is in real estate. Is that true? And what's the story behind why there's only investment in real estate for Chinese people?
Well, I don't know whether it's true or not, but it is somewhat believable. And it's not the worst thing, because real estate, if you look globally, if you look for the past 100 or 200 years, it never was a bad idea to have some land or have some apartment or some building and see that somewhat appreciate, especially in times of high inflation. But of course, in China, where it's difficult for Chinese people to invest in foreign insurance products, pension products, other foreign financial instruments, and so on, you have, in a way, the Chinese stock market and you have the Chinese property market, and the Chinese stock market tends to be a bit volatile and it's sometimes inflated. So then property, which as said was only going up for 30 years, was the place where people like to invest.
Is there a better understanding now? I mean, you are also a lot in the Yangtze Delta where the German industry sits. Like, what changes on the property market?
Well, in the recent 1 or 2 years, or in the recent, let's say roughly 1 year, there has been more again a shift towards market-driven economy, giving the businesses what they need in order to be successful, in order to create jobs, in order to create tax revenue. So right now, I think there is much more of an understanding that we cannot be too ambitious. We cannot achieve too many things at the same time in a very short period, as you have also mentioned it earlier. So right now, companies can get land, can set up factories. They get a lot of support actually when doing that. And we still see companies coming into China setting up shop, factories, warehouses, assembly, R&D, and so on. But of course, also with a little bit of a de-risking mindset and saying, for example, we see a lot of companies that rent factories. And thankfully, the government, some state-owned developers, as well as some private developers, have been now building high-quality factories. So the business model that we sometimes see is a German or Austrian or Swiss or American company comes to the market, rents a factory for the first 10 years, but the government, in order to incentivize them, covers the rent for the first 5 years. So they have a relatively beautiful factory, they don't have much real estate cost, they don't have the time, and then they can directly hire their team and then start to produce and hopefully be successful.
So that means that we also have better leverage now for negotiations on that?
Absolutely, absolutely. And that goes on everything. If you're a company that needs a small or big downtown office space, suddenly you can get longer rent-free periods, lower rents, more parking lots, better terms when it comes to your renewal rights, your expansion rights. That has totally changed. And also the market maturing. In the old days, we always had these Shanghai offices being all bare shell. Then the tenant comes, rents it for 5 years, but has to renovate, which costs a lot. Air conditioning adaptation, fire sprinkler, all of that. And now we see the market developing where the landlords are sometimes willing to cover these costs or put them into the rent and make it over a longer period and so on.
So one really needs good negotiation skills or hire someone who negotiates.
Of course, and it's very sad to see that a lot of companies are very good in whatever they procure for their business and doing a very poor job when it comes to real estate. So that's why also for my team and I, there's in a way a lot of low-hanging fruit, because people just don't start early enough. And just by starting early enough, you gain so much leverage. And then just by comparing. And often what happens is companies, they like a certain city, a certain location, a certain building, a certain office, a certain factory. They say, that's the one I want. And that's fine, but you just got to negotiate with another option in parallel to create some leverage, to gain some intelligence. And those are things that we can also do for companies, and that work very well.
You said early enough. What does that mean in months or weeks or years?
Well, when a company wants to relocate their office, we recommend to start at least 9 months ahead of time, ideally even more, ideally 12. And when it's a factory with a production, at least 18 months, ideally 24. And then you have a lot of time to do your homework and take care of all the permits and negotiate commercial and kind of run a bidding. That's the way we like to do it. We say, okay, instead of me knocking doors at some billionaire, whatever, pension fund or real estate developer, we say, no, we have a need. You guys are invited to come with your office to us. And then we run that in a bidding process, in a tender, and they fight each other and compete, and that's how we end up with the best terms.
What's the development of the next 5 years from your point of view?
Very hard to say. I'm not good at making predictions, and I'm also in that sense a boring guy. I've never been gambling in that sense, when it comes to residential properties. I usually just look at the return rates. I look at the comparison of yearly rent and purchase price. And then you see, with apartments, 2.5%. oh, bad investment. With factories, oh, 9, 10, 11%, oh, good investment. So I feel like an investment where you get a return of 9, 10, 11% is usually good, and one where you get 2.5% is usually bad. And then we go into the details. Maybe for offices we have like 4 or 5%, 6% even. For shopping malls, maybe it's 5%. And then you have to, of course, again, look location as always, but also who else is there, what's the proximity, how do you operate it?
If you have one advice to our German member companies, what would it be when it comes to property?
Well, the one I said just now, start early enough. Then, of course, be humble. You don't know what you do not know. Laws are different in different countries, markets are different, and there are a lot of opportunities. You know, again and again, we see people telling us very happily, look what I got a fantastic deal, I got such and such and such. And of course, it's good that they are happy, but we may have negotiated for their neighbor, and often that can be considerable. That can be like 20% cheaper and whatever, 30% longer, and so on. So there is a lot you can achieve if you just know all the right buttons to push.
Thank you so much. 20 years of experience in China, Bjarne. Thank you very much for joining us.
Thank you so much.